Hello, everyone. Thank you so much for joining us for another weekly wrap-up, and we hope y'all had a nice Thanksgiving holiday. My name is Jeremy Cronemeyer. I'm Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. I think a pretty modest gains during the shortened Thanksgiving week. And by the way, I hope everyone had a great, safe Thanksgiving with family, loved ones, friends, as we're moving, now we're moving towards Christmas, right? So it doesn't stop. That train just keeps on moving into the holidays. But we saw it led by technology and retail. They really led the way. So we saw the S&P, Nasdaq, Russell 2000 small cap, both or all up about 1%. We did see the S&P and Russell both reach some new highs, despite some U.S. Treasury yields and strong dollar performance in November. Both eased a bit this last week, and I think that helped boost, if you might, the equity market. So if we look at some key highlights, what were the positive sectors? We saw 10 of the 11 S&P sectors were positive, except for energy. Bitcoin surged intraday, or the futures showed about 100,000 at one point. I don't think it closed at 100,000 or above 100,000 intraday, though. Economic indicators, we did see the U.S. core PCE showing a 12-month inflation rate of about 2.3%. Personal incomes rose about 0.6%, and jobless claims dropped a good bit, dropped about 213,000. Consumer confidence, that did improve to about 111.7, with some optimism around some future job availability. That was reaching about a 3-year high in those numbers. We looked at some mixed U.S. housing data. Some U.S. home sales dropped about 17%, but some pending home sales rose to about a 7-month high. Now, internationally, we did see some German business morale fall a good bit. They've been struggling quite a bit over there. Some inflation rising a bit over in the Eurozone and Tokyo. If we look over at the Australia CPI was below forecast. In the Canadian GDP saw some minimal growth. Now this week we're going to be looking at some U.S. job reports. We're going to be looking at the labor market. We might get some, be looking towards a decision from the Fed on interest rates. And I think the expectation is 25 basis points in terms of a drop. I think that's about a 70% odds that the market's putting on that. We'll just see how it looks. Because if the economy's growing too fast, too strong, and that's what we're seeing, at least the Atlanta Fed is indicating that. I think they came out with a projection of about 3.2% growth over about a 2.8% growth for the GDP in the United States. That might signal that the Fed doesn't need to go too quick, too fast, because it's still a strong economy, so on and so forth. But I digress. We look at the labor market. We'll look at employers are neither hiring or firing at this particular point. We look at non-farm payrolls. They've declining before October's reading, which may be revised higher. So we want to keep an eye on that. That November data may show an uptick with the unemployment rate. U.S. data, we'll be looking at the ISM, the manufacturing, the PMI, the consumer sentiment, factory orders. And if we go overseas, we'll be having, or not necessarily overseas, but we'll be having an OPEC meeting, talk about global demand for energy. And are we going to be having, or are they expecting or forecasting maybe a surplus next year in oil? International data, we'll be seeing China's PMI survey coming out and their trade balance figures. Germany will be looking at their industrial production, some manufacturing orders, PPI, and then wrapping up with some EU retail sales numbers. Jeremy?
Got it. Well, Graham, I had a question for you. The market's been looking and seems pretty strong right now. Do you see that going through to the end of the year and forward into 2025?
If history is any guide, I would say yes. Could we get volatility? Absolutely. I think that's always something you got to be prepared for. And usually when you're ready for it, it doesn't necessarily happen like that. But listen, we're moving towards November, to the end of the year, to the first of the year, which is traditionally one of the best times. The Santa Claus rally, which is key, I think, the last 5 trading days of the year and the first 2 of the next. We're looking at strong data, so there's no reason for a big sell-off, but it doesn't mean that we might not get some volatility to digest a bit, but the trend is higher at this particular point. And I think there's a chart maybe we could bring up kind of where we're at in an overbought or oversold situation. We look at the S&P oscillator. If you could bring that up, maybe we'll just show our listeners kind of what we're talking about a little bit.
Yep. All right, give me 1 second, Graham.
Yep. There you go. So if we look at it, and I brought this up before, and again, this might be a short-term indicator. It's no indicator for the long term. We're still in a good, strong bull market, good, strong economy, but we could be in an overbought situation here where they're showing us anytime we see this chart move up into the red over 5, that indicates with the S&P oscillator that we could be overbought. Anytime that we dip below green might be oversold. We've been hovering a good bit around this mid-range, and yesterday we just spiked above at about 5.9. So what that means is just expect some volatility. Doesn't mean a big sell-off. It just means that we could be due for a little digestion as we move into the end of the year, the first of the year.
Got it. We always appreciate the information and the expertise, Graham, and thank you to our listeners for checking in with us every single week. And follow us on social media and check out our website for any other videos that you may want to check out. And we'll see you next week.
Take care.